So we're now recording the session. So tonight we're going to look at the balance sheet. So hopefully you've had a look at the previous masterclasses. We started off a very, very long time ago now, it seems, on accounting principles and double entry. We moved on to T accounts, and in the last masterclass, which wasn't live, it was recorded, but hopefully you have all seen it, we covered the profit and loss account. And I've got the trial balance that I originally used on the screen now. So I'll do a little recap on the trial balance and the profit and loss account before we move on to the balance sheet tonight. So as you know, these masterclasses, they're very much done in bite-sized chunks. I tend to cover things for a short amount of time, but on a regular basis, if that makes sense. I don't like to sort of bombard you with stuff, and I think it's very much easier to learn stuff in smaller parts, in bite-sized chunks, rather than do sort of long-winded webinars, which I tend not to do. So we're hopefully going to spend about half an hour tonight, I would say, looking at the balance sheet. So what I will say is just a sort of few housekeeping rules on these webinars, which I do normally cover, although I haven't done them for a while. The chat box, I guess you are now familiar with. Some of you have typed into it already, which is great. So if you have got any questions at all as we go along tonight about anything that I'm covering, then please do type it into the chat box. I can't guarantee to see it straight away, because obviously I'll be looking at the screen in front of me. But if there's any questions there that I haven't answered as the session goes on, then I will try and answer them at the end of the session. But yeah, so by all means, type away. It's very much interactive, these sessions, as hopefully a lot of you will know. And I do try and answer the questions as we go along. I'll certainly try my best anyway. And the other thing I would say is on the audio side, I'm just going to click a few buttons here just to make sure I've got it all correct. On the audio side, if you can keep your microphone on mute, that'll be a picture of a microphone with a line through it. And I think pretty much all of you are on mute at the moment, but if you could keep it that way, that would be great. And as I always say, it's not because I don't want to hear from you, it's just to eliminate background noise, really. So if you can make sure your microphone is on mute for the duration of the session, that would be fantastic. And as I say, I will keep the chat box there in case anyone's got anything they want to say as the session goes on. Okay, so I've got the trial balance in front of me on screen now, and you'll see some of it's in grey and some of it's not shaded at all. Now, the grey shaded area at the top, the reason I did that was to differentiate the profit and loss and balance sheet items on the trial balance. So you'll see here, if I just highlight that grey shaded box there, that is actually all profit and loss items. And those items there in that box formed part of the profit and loss account that I recorded for you last week and is now on YouTube. So as I say, if you haven't watched that, then please go ahead and do that at your convenience. And the bottom half of the trial balance, so that what I'm going to highlight now, which is not shaded, these are all balance sheet items. So you will normally find that in a sort of normal trial balance. You'll find that the profit and loss items form what I'll call the top half of the trial balance, and the balance sheet items form the bottom half. It's fairly common to have a TB like that, and it does make things a little bit easier if you can almost, separate the profit and loss items and the balance sheet items in your own head, just to make things a little bit easier for you. So I won't go into the actual detail of the trial balance too much, because we did cover that certainly in the previous session. So I'm just going to move down the spreadsheet just to have a quick look at the P&L account, which is what I recorded in the last session. I'm just going to answer Rebecca's question. The balance sheet is a statement of financial position. Yes, absolutely right, Rebecca. It is indeed. So that's a very good point. The profit and loss account, which I've got on the screen now, normally covers a period of time. So in this case, we're covering the profit and loss account covers the year ending 31st of December 08. So it will cover the whole of that year, for the 1st of January 08 to the 31st of December 08. So very, very quickly looking at this profit and loss account, which, as I say, we covered on the last session, we've got it split. And again, I've split it into boxes just to make it a little bit easier to read and to understand. So the first part of the P&L is always sales, so that's our income figures. Then we've got cost of goods sold, so that's basically how much it's cost us to produce that sales figure. So we've got the purchases there, and we've taken off closing stock, closing inventory, as the book that I've got calls it. And that gives us a total of cost of goods sold, and that gives us our gross profit. So the gross profit is the sales minus the cost of goods sold. And we've then got a few expenses. We've got salaries, motor expenses, rent, insurance, and general expenses, and that comes to that figure there. And our net profit is the gross profit less the expenses. So I know I've run through that really quickly, but I did cover that in a lot of detail in the last session. So it's just a real refresher, really, and just to show you how that's made up. And it's made up from the shaded area of the trial balance above. So as I said, what we're going to cover tonight is the bottom half of this trial balance, which is going to form the balance sheet. So when we've drawn up our balance sheet, fingers crossed, it should balance, and I'm pretty sure it will. I hope it does anyway. So it's quite colourful, my balance sheet, and the reason I've done that is to, again, separate out the different parts of the balance sheet just to make it a bit easier to understand, a bit easier to read. Hopefully it's not too garish for you. Well, we've got fixed assets in blue, we've got current assets in yellow, we've got current liabilities in brown, and we've got the capital account in green. So what I'm going to do is I'm going to slowly work through this balance sheet. I'm going to fill out all the individual figures from the trial balance, making up the balance sheet. And it's just to show you how we draw up the balance sheet and what it means, really. So as Rebecca said just now, the balance sheet, it doesn't necessarily cover a period in time. The balance sheet is a statement of financial position, as Rebecca says, as at a certain point in time. So our accounts comprise of the profit and loss account for a period of time. In this case, it's 12 months. And the balance sheet is as at a particular point in time. So in other words, it's what our fixed assets were worth, what our current assets were worth, etc., at a given point in time. And that given point in time is the final day of the profit and loss account, which is the 31st of December. Rebecca's just asked, would drawings be in it? And yes, they absolutely would. We will cover drawings, Rebecca, shortly. So it's just very important to remember that the profit and loss account covers a period, normally a year. The balance sheet is kind of a snapshot of the business as at that year-end date. So hopefully that makes sense. So the first thing you'll normally find on a balance sheet is fixed assets. So this is the assets that we own, and it is things like, for example, premises and motor vehicles. So any sort of big assets that the business owns, you'll find in the first part of the balance sheet. So that's the first thing we're going to fill in. So the first item we've got is premises. So rather than sort of directly link it from the figures above, I'm going to actually type it in manually just so we can see how it all works. So if we go back to our trial balance, and our premises figure there, which is a debit balance, is 95,420. So I'm going to go back to the balance sheet, I go in there, and I'm going to put 95,420. Okay. So our next asset, our next fixed asset, is motor vehicles. So we'll just move back up to the trial balance, and there's our motor vehicles, 16,594. So we'll put that figure in there, like so. And that gives us a total fixed assets figure of 112,014. Okay, so that's our sort of big assets that the business owns, and that's our first part of the balance sheet. So as I said, those two figures there are the value of the premises and the motor vehicles as at the 31st of December. So we've almost taken a photograph of the business on the last day of the year, and we've given a figure of how much the premises are worth and how much the motor vehicles are worth. So that's our fixed asset part of the balance sheet. So that's the blue section done. So we're going to now move on to current assets. So they're still assets of the business. It's things that the business still owns, but it's very much sort of short-term life assets rather than long life assets, which fixed assets are. So premises and motor vehicles, for example, last a long time. But current assets, we've got inventory, which is the same as stock. We've got accounts receivable, which can also be called debtors. We've got the bank account, and we've got the cash account. So as you can see, sort of compared to the fixed assets, they're very much shorter term than those, and hence the title current assets. Now, Katrina says, when would you include depreciation? Now, that's a very good question. Depreciation is going to be covered in a lot of detail in another masterclass soon, but I decided not to include depreciation in this example, just to sort of not overcomplicate it. The idea of this this session is just to show how the balance sheet works and what it looks like. So I decided not to overcomplicate it with depreciation. But you're absolutely right. Under normal circumstances, and as I say, we will cover this in another session soon, there will be depreciation coming off those fixed asset figures. Okay, so we're going to move on to current assets now. So in the yellow box. So inventory. Now inventory, stock, it's the same thing, but one very important point to note is that inventory in this circumstance was not in our trial balance. Now the reason that that was done is because the trial balance was drawn up as at the 31st of December. So this is the balance of all the individual codes as at that point in time. And the other thing that the business owner did was to do a stock take. So I just put a little note at the bottom of the trial balance to say the stock take was done on the 31st of December and the value was 12,408. Now the reason that it's not included in the trial balance but the figures will still balance is because we include that 12,408 in both the profit and loss account, which is there, and we include it in the balance sheet as well. So the debit and the credit entry will go into either the profit and loss account or the balance sheet, and hence we should still all balance, if that makes sense. So the stock take was done on the 31st of December and the value of the stock was £12,408. So we're going to go into inventory and we're going to put 12,408 in there like that. Now the next three accounts, we've got accounts receivable. So you might know that as debtors. That's the amounts of money that our customers owe to us. So we're going to go back to the trial balance and we're going to find accounts receivable, which is there. So our total debtors, if you like, were 26,740. So I'm going to enter that in here, 26,740. There we go. Okay. So our next item is bank account. So now bank accounts are quite an interesting one on a trial balance and a balance sheet, really, because it can be a debit or a credit balance, because we can have money in our bank account, which we have got in this circumstance, or we can have overdrawn. Andy's asked about overdraft, so that's brilliant timing, Andy. So I was just about to say that. If it was a bank overdraft, then it would fall in the brown section, which is current liabilities. The reason that would happen is because a bank overdraft is essentially a liability because we owe it back to the bank. The business owes it back to the bank. But in the circumstance where we've got actual money in our account that's our money, then that's classed as a current asset. So that's quite an important point to note, is that if we've got a plus balance in the bank, it would be a current asset. If we've got a minus balance in the bank, then it would be a current liability. But for this purpose, we know we've got some money in the bank account. So we're going to look there and it's 16,519. So we're going to move down to the bank and in there goes 16,519. Okay, and then we've got a little bit of petty cash to enter as well. So this is money we've got in our petty cash tin, so it's obviously a current asset. We can't have minus cash, so cash effectively is always going to be a plus balance. It's always going to be a current asset. So we're going to move back to the trial balance to check our cash figure, which is 342. So we're going to enter that in to there. So we've got 342 to go in there. So that gives us our total of our current assets. So far we've got the fixed assets in blue. So these are the long life assets that the business owns, which is premises and motor vehicles, which gives us that figure there. And then we've got the current assets, which the business also owns, but they're far shorter life than fixed assets, so they are classed as current assets. So we've got stock, we've got accounts receivable or debtors, we've got money in the bank account, and we've got cash. So those four come to 56,009. So we've then got another figure there, which is adding up the fixed assets and the current assets. So our total assets, if you like, so you could almost say the top half of our balance sheet, all the things that we own, or come to £168,023. So that's the total of our assets in the business. So we're now going to look at the brown box, which is current liabilities. And as Andy quite rightly said just now, current liabilities are what we owe. So we don't own them, we owe them. So current liabilities are things like accounts payable, which we've got here, or you might know them as trade creditors, or they might be sort of PAYE balances owed to HMRC. There could be VAT balances owed. There could be short-term loans. Anything really that the business has to pay out is classed as a current liability. So we've only got one in this example here, in the exercise here. So to make it a little bit easier, we've just got accounts payable. So you might know that as trade creditors. So we're going to go back up to our trial balance, and we're going to find trade creditors. Accounts payable, trade creditors, same thing, 16,524. So we're going to go back down to the balance sheet, and we're going to click in there. I'm going to say 16,524. Okay, so the next figure here which we have there is a calculation is, oops, sorry about that, 151499. So as you can probably tell, that is our total assets, total fixed and current assets of 168023, less our current liabilities of 16524, gives a figure of 151499. So basically that's a total of our assets, of both our fixed and our current assets, and it's taking away our current liabilities. So we're basically saying everything the business owns less what the business owes. So that gives us a plus figure, which we would normally do. A balance sheet is nearly always going to be a plus figure unless the business is insolvent, which we won't go into now. But normally your assets are going to be greater than your liabilities. So in this case, our assets minus our liabilities equals a figure of 151499. So that's basically the sort of the assets minus liabilities section of the balance sheet. So the remaining section of the balance sheet is the capital account, which we know has to balance, because this is everything the business has created, if you like, and this is everything that's been created for the business by the owner. It's going to take account of the capital account balance that the owner had. It's going to take account of the profit that we made earlier on in our profit and loss account, and it's going to take account of drawings that the business owner has taken out as well. So when we finished entering these figures here, that figure there should come to the same figure, and our balance sheet will balance. So because that's the sort of accounting rule that assets minus liabilities equals capital, as we've done on our sort of first ever masterclass. So this, by the time we've entered the figures in, is hopefully going to prove that point. So we're going to first of all look at the balance at 1st of January 08. So on the first day of this year, how much was our capital balance? How much had the proprietor? What was the balance of the proprietor's capital account? That's what we're trying to find out. So that's going to be on the trial balance here. So at the start of the year, it was 138066. So we're going to enter that figure in there. We're going to say 138066 in there like that. Okay, so we just ignore this. This is obviously a calculation. We'll ignore it until it's finished. So we have to add on the net profit. So this is the proprietor's money, effectively, that he's got in the business, 138,000. But he's now got some more money in the business because he's made a profit this year. So we effectively need to add that net profit to his capital account to give him a new capital account figure. So at the start of the year, it was 138,066, and we're going to add the profit, which is 21,858. So that's our net profit figure here from our profit and loss account, 21,858. So we're going to put that in there. So we're going to say 21,858. Okay. Okay, so it doesn't quite balance, but we've got another figure to enter. So his capital account, he started on the first day of the year with 138,066. Now at the end of the year, so as at the 31st of December 08, after a year's trading, the proprietor made a profit of 21,858. So that gets added to his capital account. So his sort of investment in the business, if you like, is now 138 plus 21. So his total money he's got in the business before he's taken any out this year is 159,924. But the business owner has taken some money out for himself in the form of drawings, as we will see from the trial balance, which is there, which is 8425. So we're going to enter those drawings into here, equals 8425. Okay, and we can see that our balance sheet agrees. So the accounting equation that states assets minus liabilities equals capital is now absolutely right, because these two figures do agree. So just to sort of recap, we've got our fixed assets plus our current assets equals that figure there. We take off our current liabilities, which is what we owe to our trade creditors, our suppliers, and that gives you a figure of 151. And the proprietor's capital plus the profit he's earned this year less the money he's taken out of the business this year equals the same figure. So we know that our balance sheet balances. So that's basically the balance sheet. So it's just important to remember, really, it always follows a sort of the same sort of pattern. So you're always going to get the fixed assets first, because they're the sort of big items that the business owns, so they always go at the top. Then we're going to get the smaller items, the sort of the quicker turnaround items, I guess, if you'd like to call them, the balances that change, they change more quickly over time than the fixed asset balances. That's why they're called current assets, which in this case is the stock, the debtors, the bank, and the cash, and that will give you that figure there. And the current liabilities, which, as I say, in this case is accounts payable or trade creditors, if you like. And as I say, HMRC debts would also fall into this category as well. And you may also get, which we haven't got here, you may also get long-term liabilities. So if you've got, for example, a bank loan that you're paying off over, I don't know, 5 to 10 years, then that would appear in this section of the balance sheet as well. But it wouldn't be under current liabilities, it would be under long-term liabilities. It's not current, it's not like a trade creditor which is going to be paid very quickly. It's something that's going to be paid over a much longer period. So as I say, a bank loan's a good example of that, or maybe a finance agreement. Anything that you're paying off over several years would be classed as a long-term liability. We haven't got that in this example, but it's just something else to bear in mind because it will affect the figures on the balance sheet. So that's the sort of, I guess, what you would call the first half of the balance sheet, if you like, the fixed assets plus the current assets minus the current liabilities and minus long-term liabilities if you had them. And that's all been funded by the owner's capital account, which is the sort of other side of the balance sheet. So because of the accounting equation, it should always agree. So hopefully, there we go, 25 minutes we've done that. So hopefully that's helped. Hopefully that's explained the balance sheet, so what happens to the net profit. So okay, Andy, so that's absolutely fine. So just to recap on the net profit. So we've done our profit and loss account. We've done our profit and loss account for the year. The profit and loss account for the 12-month period gave us a profit of 21,858. And that profit gets added to the owner's capital account. So the owner gets that to spend, if you like. The owner's made 21,858 in the year. So that gets added on to his capital account, which we started the year off at 138,066. So we add the net profit on, which gives us a figure of 159,924. But then, of course, the business owner will have taken some money out of the bank account during the year. So in this case, he took out £8,425, which gives us a new capital figure. And that's the one we'll start the next year at. So when we come to prepare the next year's balance sheet, our balance at 010109 is going to be that figure there of 151499. So that's going to be the owner's new capital account figure, if you like, at the start of the next year. So yeah, I tend not to talk about debits and credits in balance sheet because there's no debit and credit in balance sheet. So I'm not gonna start saying you debit and credit this in a balance sheet, because the balance sheet is not something that you debit and credit. You just have to remember that the net profit gets added on to the owner's capital account to give you a new figure, and the drawings get taken off that to give you the new capital account figure, which is what you start the new year from. I just don't want to get into a situation where I start saying you debit and credit the balance sheet, because you don't do that. You don't debit and credit balance sheets. So the balance sheet is just basically a summary of a financial position as at a certain point in time. It's not actually an account it's not a T account, if you like, that you debit and credit. The individual accounts are, of course, the individual accounts are T accounts. And that goes back to the trial balance. But as I say, the balance sheet is more of a statement of financial position rather than something that you debit and credit. So there we go. So the balance sheet is now done. So hopefully that's helped. So yeah, so if there's any questions at all, or any comments that you've got about that, anything you didn't understand or want me to recap, then I'm more than happy to do that. But hopefully that's helped. We're going to upload this video onto the YouTube channel in the morning, so anyone that's not attending tonight can watch it, or if you just need a recap of what you've seen, then you can obviously go ahead and watch it. But I've covered that in around half an hour, so I know it's not too long, but as I say, I prefer to do this in smaller chunks rather than bombard you with hours and hours of material that you're not going to remember. So that's about it for tonight's masterclass, the balance sheet. So hopefully that's been useful for you. Hopefully it's been helpful. We're going to stop the recording shortly. And so I just want to say thank you all very much for coming along. I hope it's helped you. I'm going to be here. I'm going to be here in front of my computer till 8 o'clock. So if there's anything you want to ask, whether it be about the balance sheet that we've covered tonight, whether it's about the profit and loss, the trial balance, double entry, or anything at all you want to ask me, I'll be here till 8 o'clock if you want to pick my brains. But I'm going to stop the recording now. So thank you very much, Katrina. It's good to be back as well. Thank you very much for the nice comments. It's really good to be back. As I say, I'm sure you can understand why I've had a few months off. But yeah, looking forward to getting back and looking forward to the masterclasses moving forward. So they're now going to be on a weekly basis. So we'll look forward to seeing you all next Monday at 7 o'clock. But for now, take care. See you all soon.